that's why I'm really excited to hear from the first keynote of today. We're going to be now talking about the fund of funds, first with the keynote and then with a panel discussion afterwards. You're going to see that that's a bit of a pattern that we have today. I like that. We're going to be hearing from Hubert Cottoni about the creation of successful fund of funds across Europe. According to Arnaud, Hubert is the Pope of the fund of funds, right? He really introduced this topic as a director at the European Investment Bank Group. And so I think there's nobody better to tell us about this, introducing the topic, setting the scene, giving some examples of successes across Europe, and ultimately paving the way for the discussion of a fund of funds in Austria and in the DACH region. So without further ado, I'd like to welcome to the stage the Pope himself, Mr. Hubert Cottoni.
You always wanted to know what a Pope looks like. Thank you very much for the invitation. I guess the topic of fund of fund is something which has kept me busy over the last 25 years when I started to join the EIF back in the early 2000s. And in the meantime, I guess the EIF is, I haven't done the numbers in preparation, but well over 30 fund of funds. And I've always asked myself the question, why didn't I succeed in Austria? I've succeeded in countries like Greece, Bulgaria, Portugal, Spain, in the Baltic states, literally everywhere except here. And the question is why? There might be many good reasons, but still I have not come to grips with it. Therefore, your initiative to put this all on paper, start lobbying, using this group of influential people to lobby the politicians, to make them more comfortable around this, is critical. I will then show you a few figures which are impressive, but I take the summary away already today. Now, fund of funds at the end of the day are not only a guarantee for impact in the market and the creation for a more robust ecosystem, but they are also financial returning. So all our fund of funds are returning financially at least the nominal capital, but you will see many of those much more. And I guess that's an important message when you speak to a Minister of Finance and he starts committing, let's say 100, 200 million to a fund of fund. Firstly, he or she is not going to put this down on day one in the budget of day one, but it's going to be dispersed over 5 years, so even longer than his or her governmental period, point number one. And point number two, as we see in our cases, the reflows will certainly cover already in year 5 for the commitment they have made. So I've already taken away the point. I could walk down the stage. No, but let me set this in perspective. Ingo mentioned the Draghi report, and I fully agree you must read the Draghi report. It's a have-to-read documentation. And out of the Draghi report, I take only one number, which I like to put in perspective. And the number is 750 to 800 billion a year, so annually. And he says that he needs the 800 billion we need in order to push technology innovation and in particular to complete or really kickstart the transformation to a green and a digital Europe. So to make Europe fit for the future, he comes up with 750 to 800 billion. I can't repeat this number often enough, which, by the way, is been supported by independent data studies you might have read about a few months ago. The 3 economists of the ECB came up more or less with the same figure. Putting this in perspective, 800 billion is exactly the amount of the European Recovery and Resilience Program, which runs for 5 years minimum. Just to give you an idea, the 800 billion of the recovery program, which was put on top of the 7-year budget, which is 1.2 trillion, is for a whole period. So we are talking huge numbers. So the Commission, the member states, will never be able to raise this. What we therefore need is what Ingo has said, call it a capital markets union, but certainly what we have to succeed in bringing European savings to support European investments. We have to channel the savings into investments. And that is the most critical part. How can we do this? Certainly pension funds, etc., are important to this. Now, in order to make the case, and before I go into our case studies of the fund of funds, I like to set the scene of the private equity and venture capital market today, because it's not very rosy. So what we have done, we have issued just recently a report, a survey, where 624 general partners, so fund managers, responded to a very comprehensive questionnaire, which is the largest study of its kind, certainly over the last few years. And what are the findings? Let me maybe start on a positive note and then finish on a positive note. The positive note is that despite the macroeconomic situation which we are in, there is a relatively positive outlook which we have received in the study. In particular, because GPs, so fund managers, are positive about artificial intelligence in industries, in clean tech, in deep tech. So there are very good positive signs in the market going forward for the next at least 12 to 18 months and to be realized over the next 5 years. So material, enterprises, know-how seems to be in a market which makes GPs positive about the future. But what is today's situation which keep fund manager awake at night? It's certainly, and that is an important finding and an important statement, also reflecting a bit back to what Ingo has said. The banks are not here to provide equity. The problem is the exit routes are closed. So literally, VC-backed SMEs, VC-backed enterprises don't find an exit. That is the big problem, much bigger than fundraising. I repeat this again. Exit for VC-backed enterprises is the problem. And what results this in shows you this figure. We have a sharp increase in insolvency and liquidations. 30% are dying. And not dying because their technology is not good, not because their management isn't good, not that their market potential wouldn't be good. They're dying because they're illiquid. This is the real issue. At the same time, obviously, trade sales, the most important exit route in Europe at least, has dropped sharply from 50% to 28%, and the IPO market is dry. We are at 4% more or less. So that is the real situation. So there is no liquidity in this market, and SMEs and really innovative SMEs are unfortunately dying. So securing financing is the key challenge. And the question indeed is, what can be done? The banks cannot be of help. Here we have closed it with the banking regulation. That is not a venue. At the same time, and this is equally important, and this is what we see as the EIF, as the largest limited partner in Europe, we see that the good companies indeed are getting sold out to America or Chinese funds. And with this not only being sold out, with this meaning also transferring most likely the know-how and the management to America. So the few exits we see, unfortunately, they go the wrong way. So we can't keep them here. So what we need, again, besides VC private equity, we need a scale-up fund of fund. And we have just, you might have heard this about a year ago, we have launched successfully a scale-up fund of fund to allow or to guarantee or support that the European VC private equity market can indeed raise to a billion or above. Why is this critical? In particular, when valuation will come back into the market, we need VCs, private equity funds, which can raise tickets of 100 million at a shot. This is not possible today. We have 2 or 3 funds in Europe which can raise $1 billion and above. In America, we have 50 or 60 at the minimum, and raising well beyond $1 billion and above. So this gap we are trying to close with our initiative. It's still a difficult journey, but we will get there in one way or another. Now, when looking at the opportunities and closing this analysis on a positive note, the portfolio companies, a good number of the portfolio companies in Europe's venture funds, VC funds and private equity funds is often still AI focused. Biotech is fairly strong in the portfolios, clean tech, etc. So that means the portfolio companies, when it comes to know-how, seem to be strong. The problem is, will they survive? But the quality of the portfolio companies in existing portfolios is good and strong. The second one is the outlook, as I mentioned before, in the market is again strong for the next 3 to 5 years. In innovation-oriented, so particularly in the AI industry-focused innovation, seems to be very strong. Biotech, energy and climate sector equally strong for the years to come. And what I see as the biggest potential, is the absence of female managers in funds and female entrepreneurs. Because what we see, they bring diversity. With diversity, they bring different decision making, they bring different investments, and they would, certainly, give Europe a particular kick, which we are missing. I'm sorry to be so blunt and direct, but we are putting a lot of focus and money to support women to become active in the industry, it's in the private equity venture capital industry, but also to become entrepreneurs. So I see this as a real opportunity for Europe going forward. Now, what have we done in the fund of funds? When I started in the ERF back in 2006, the then acting chief executive said to me, I only got a 2-year contract. He said, Hubert, in 2 years, this business needs to be self-sufficient. You have to pay the salaries of whomever you are going to employ. So obviously, I was running on day one, and the business model was very simple, I thought, to use European structural funds of member states to return it to me, to pay me a management fee in order to set up fund of funds in these member states, to make investments via VC funds, private equity funds, business angel co-investment funds, etc. So the proposal seemed simple. This is also why I decided to move away from Telekom Austria and join the ERF. Putting it in place was a bit more difficult because on the other side you have politicians. And it's not a political home run if a Greek politician says to the Greek voters, I have so many monies coming from Brussels, but that much of this money I'm returning back to Brussels, i.e. to the ERF, because I think they can do a better job. There's not been an easy call, not an easy pitch. Nevertheless, we succeeded, and I will talk about this in more detail. Let's talk about one of our first funds, which we did before the structural fund, is the Portuguese Venture Capital Initiative. And here the objective was very clear by the politicians that we would like to have already private investors at the level of the fund of fund, not only public funds. And here indeed, as you can see on the investors, we were able, besides ourselves and the state of Portugal, to have 11 private investors. And these are huge corporates which have invested with us in this vehicle. It's a very small vehicle, 100 million. The impact was 370. We invested in 7 funds, those 7 funds in 53 companies, and an IRR, which is rather modest of 1.5% in this particular case, and the DVPI of 1.1 times. So not really losing money as has promised before, but the picture gets much better if we look into Spain. Spain has a fund of about 100 million. Investors, again, private and public together. We had 13 investors, for instance, huge airlines in Spain, etc., etc. We signed 14 funds for a total of 1 billion. So the leverage here is quite impressive, of 5.4 times. An IRR, a net IRR at the holding fund level, at the fund of fund level of 5.6%, which is not so bad, I would say, in particular in times when you have a zero interest scenario, and the DVPI of 1.6, and then even a positive DPI. So the dividend paid out is already more than the nominal paid in. And that's quite attractive. And here's the story of what I mentioned before, using structural funds. This is the case in Greece. Back in 2010, we were given a mandate, and we had to make this very attractive because we didn't have any funds. There were no funds, right? So who should we invest in? Where should we invest in? So what we did, we always do this, we did a call for expression of interest. I have 2 more minutes, sorry. Oh gosh, because this gets exciting here. So we got over 60 proposals, out of which we obviously had to put away 30. We didn't ever look at this because they just didn't fit. But the other 30 did fit. And this is another important message. Although your market seems to be dry, if you do a proper call for expression of interest, you will see the market to respond to it in a positive manner. And just to look, as now we do the 300 million, we blah, blah, blah. But more importantly, the Greeks said to us, but now we have learned how to do this business. Can you move out of the space of general funds into some more thematic funds? We created the space for the Hellenic public bank. They do generalist. We went, or we are going now into thematic equity of the fund of fund, got new money for this, very specialized industries. Bulgaria, even better, but no, it's not there. But I give you, because I didn't make the point of the female entrepreneurs and VC. Here we have all the funds, all 10 funds in Bulgaria. They return, except for one, positive returns, net returns, anywhere in the region between 5.8 and 13%. And who is the winner of 12.86%? A female-led VC. And I'm very proud of this. Now, no, I haven't got this here. Closing, do I have still a minute? A fund of fund, the creation of a fund of fund is not going to solve all problems. But it is, as far as I'm concerned, a very important stepping stone in, firstly, to raise awareness for this industry, the need for this industry. Secondly, because of the nature of these fund managers, you will automatically can push your strategy through. So if Austria has a particular strategy, for instance, artificial intelligence in productive industries, you will get it if you put it smartly into your strategy and if you select your fund managers correctly. Thirdly, there is a lot of patient capital, as we have just heard. If you do this structure properly, and we see this when we put out the documentation, it's like a sea. It really drags along other LPs almost automatically. So if you put the structure up solidly, if the documentation is good, you will attract private capital into those funds of funds, but certainly in the funds in which this fund of fund is going to invest. So, and as I said before, if you pitch to the Austrian government, let's say a 200 million ticket, the 200 million ticket committed today will be paid out, will be drawn down over minimum 5 years, potential 5 plus 1, so therefore 7 years, which, as we see in all the cases I have demonstrated here, but all the other cases which we have in the EIF, they will start returning cash after year 5. So the Minister of Finance should not necessarily be concerned how to cover the necessary cash flows starting year 5, because he will already receive the euros from the underlying funds. I would have liked to talk longer. Thank you so much. All the best.